the horizon, you can see that the buildings are sloping upwards, one after the other, and then downwards again. And that's very similar to an uptrend and a downtrend on a chart. And this is exactly what we can see here on this dollar-yen line chart. Now, this is called a line chart because simply the closing prices of each day's price data are being connected up, and therefore they start forming this line. And what you can see here is an uptrend where you have higher highs and higher lows, and a downtrend with lower highs and lower lows. But if you want to get more information out of a chart, you need to look at a bar chart. On this bar chart, we have exactly the same uptrend and downtrend we saw on the previous line chart. The difference being that each day's price action represents one of these bars. And you can see here on the left-hand side, this horizontal line is the opening price on that day, and on the right-hand side, the closing price of that day. And then this is the high of the day and the low of the day. And a bar chart will give us far more information than a line chart because you can see where the market has been trading a very wide range, and you've got a small volatility today, for example, where the market's been trading in a small range. So basically you have more information than on a line chart because you've got the opening price, the closing price, the high of the day, the low of the day, and you can also spot chart patterns within the up and down trend, which is what we're going to discuss. But before we actually go into the details of an uptrend and downtrend, I'd like to quickly touch upon the Japanese candlestick chart, which is very similar to the bar chart in as it also has an opening and a closing price and the high of the low of the day. But the difference being that when the close is above the open, you would draw this box, which is called a body, and fill it in with a light color, either green or white. And that tells you that on that day, the market went up. If, however, the closing price is below the opening price, you would draw this box and fill it in with a dark color, either red or black. And that means that the market went down on that day. And these lines to the top and bottom are called shadows. So basically what this tells us is the same as the bar chart, but it's much easier to spot on a chart whether the market's going up or down. Now here we see a section of this up and down trend I just showed you, and you can see here that we clearly have higher highs, each high being higher than the one on the left on the chart, and higher lows, this one higher than that one, and then this one. And if you want to correctly draw a trend line, what you need to do is connect up the lowest point of your chart with the next higher low, and ideally you don't want any price action to go through that trend line. So in this case I would have to redraw it like so, and you can clearly see here that the trend line is touched at this point and that point and that point. So we have 4 intersection points with the trend line, and it needs to be drawn in case of an uptrend below the price data. And ideally you would like to have 3 points of intersection or more. Now in case of a downtrend, you have lower highs. This high is lower than that one, and then this one, and that one, and this one, and this one. And you would have lower lows. This low is lower than that one, that one, etc. So that's the definition of a downtrend. And if you want to draw a correct trend line on here, you would simply connect up the highest point of that chart, go through the other intersection points, and making sure that whilst you do that, no price data is above this trend line. So in case of a downtrend, you connect up the highest points of this chart. And again, you need at least 3 intersection points. But most of the time, what a market tends to do, though, is this. And this is called a sideways trend, where the market's actually not trending or it's just going sideways. And you get lots of conflicting signals. Here, for example, you have a higher low, but you also have a lower high, because this is fractionally lower than that. So you don't have the definition for an uptrend, nor for a downtrend. And here you have highs, and then you've got some lows, but basically the market's all over the place. And this is what happens probably about 60 to 70% of the time, where markets basically do not trend either up or down. So let's get back to our original line chart, where we have the uptrend and the downtrend. And this is what we saw when looking at the skyline of London.